Well, hello and welcome everyone to our live stream today. I am experiencing just a little bit of technical difficulties with cameras today, but the best news is that you can all still see my screen. So of course we are going to dive into VantagePoint here momentarily and get started. And today's session is going to focus on a top-down approach. It's so vital for everyone to understand the importance of how to approach the markets. Just gosh, where do you begin during the day? And so that's what we're actually going to walk through today. So whether you're a VantagePoint user or maybe just starting to use the software, or maybe you've never even seen VantagePoint before, just do me a huge favor and type that in the chat so I know who I have on the other end of the line. Do me a favor and just let me know if you're seeing VantagePoint for the first time. Just put a 1 in there, or maybe just let me know who you are so I know who is on the other end of the line. So as we dive into our software today and our education, just know that I'm not a licensed advisor, so we are going to be going through things in the markets. Of course, trading's risky, but always looking for better ways to give you an advantage in the markets. And VantagePoint is a predictive software that can help you anticipate trends. And one way to do that is to set up what we would call that top-down approach. And so if we take a look at our markets, a great place to start is going to be the SPY. So if everyone knows what the SPY is in fact the ETF that follows the major indices, right? The major S&P. So the SPY here is one of the markets that VantagePoint forecasts for. And so you can see, in fact, we do have quite a few different indicators and setups here within the VantagePoint software, but let's just go ahead and start with the basics. And so I'm going to just jump on down to give us a really nice simple view so you can see how easy VantagePoint is to use. And so we'll start with the SPY. Now, when it comes to market assessment, it's again so important to know where to begin. Have you ever, tell me in the chat if you can, because I want to know kind of who else struggles with this. It's just, where do you even start? Like, what is step one? Because that is sometimes the biggest challenge, is just getting started. So that's really what I wanted to, provide everyone with today, is the education and the power and the confidence to just know where to start your trade day. And so the first step there, and I'll just kind of draw it out on the screen here for you, is really going to be that market assessment. And my handwriting with a mouse is not the best, but you can see we're going to start with the markets looking from that 10,000 foot view. All right, because when you better understand what the overall markets are doing, that has a huge impact on how you look at the individual stocks as well, but can also provide a blueprint or kind of step-by-step instructions on where to take your trading, what type of strategy might work best under current conditions as well. But also the second step, which step one will lead you to step two, right, is going to be that sector movement. So this is that top-down approach. So step number 2 is the sectors. What areas of the market are in fact moving? All right. Do we have money movement in, technology, and maybe money flowing out of another sector like financials? Right? And again, that's just an example, but knowing what the flow of money movement is and the sentiment of the market are going to be the first 2 steps. So again, now you have step 1 and step 2. And then what is step 3, right? Step 3 is evaluation. That's going to be evaluating your either individual opportunities to take a position, or evaluating opportunities to better manage current positions, or possibly even identifying exit strategies as well. So when we talk about this top-down approach, we're really assessing, again, from that market standpoint, then moving on down to the sectors, and then down to the individual opportunities for evaluation, right? So again, that's step 1, 2, 3. And what this does is essentially creates a funnel for you to then make those critical trade decisions, okay? So from this top-down approach, we start with step number 1, all right? So step number 1 is that market sentiment. All right, now VantagePoint makes it very easy to understand market sentiment. Now, I'm going to walk you guys through, for those of you who are just now kind of getting into VantagePoint, or maybe this is the first time you've seen it. Again, if you haven't let me know that this is the first time you see VantagePoint, please do so, because this is going to help me to better understand kind of where your assessment level is at and how kind of basic we need to go today, which is fine. Going back to the basics is always a good idea. So let's build our portfolio, and then we'll walk through how to read the market assessment. So we'll start with the SPY. The next market that would be kind of critical to evaluate would be the Qs. Now, who knows what the Qs follows? Can anybody tell me in the chat? Let me know, so that way I kind of know who's perfect. Okay, good. Thank you. All right, guys. So from that market assessment, we have the Qs, and yes, absolutely, that's going to be the NASDAQ, right? So the next piece then is going to be the Dow, which we would pull up the diamonds. Now, guys, these are ETFs, so even better than just the individual stocks and just kind of randomly selecting a stock, you can actually trade these markets as well. These are ETFs, or exchange traded funds. And these assets are tradable just like the individual stocks. So I'm going to jump back over to the SPY here. Again, these are our major markets. One's going to follow the SPY, which is the S&P. The Qs are going to follow the NASDAQ. And then the diamonds is going to follow the Dow. All right. So not to be confused with literal diamonds, right? But the actual indice itself. All right. So keep those questions coming as we go through the session today, because, you know, my goal here is to answer as many possible questions that you guys have, and of course get to some live analysis on some individual ticker symbols as well. So as we see, well, Gail, welcome back. We're so excited to have you. So thank you. Thanks for coming back. The SPY here is currently bullish. And I say that, and I'm going to walk you guys through this scenario, but I want you guys to see that, one, this forecast is actually for yesterday. Now, that doesn't mean that it's late. It's actually early, because VantagePoint family members had this forecast last night to anticipate the potential market trends for today. All right. So with this incredibly powerful artificial intelligence built into the predictive indicators that you see here, we can forecast those trends moving forward. All right. So what I mean by that, and we're going to go through a couple of examples together here. I'm going to zoom in just so that way we can get a little bit closer look here at our trend. And so when you see this blue line, now everybody focus on the blue line. For my VantagePoint family members, you guys know the blue line. I know you know it well. And for that, I am incredibly proud, right? But for those of you who are not familiar with the blue line, this is our predictive moving average. This is the blue line that houses that powerful artificial intelligence and predictive information. And so when we see that blue line crossing above the actual moving average here, that's going to give us a bullish expectation. All right. And you can see, even we made it easier, right? Thank our research and development team for color coding things. Raise your hand if you love a good color coding system. So here it is, green for bullish. And so this is going to give us a bullish expectation, just like what we see back here. So we can see that crossover down at the bottom, and then that blue line crosses over the black line, the trend turns green and remains green all the way through until we have a little bit of volatility here. And I'll even show you how to walk through that volatility using the artificial intelligence. And that is coming up in just a moment. But just to get the basics here, when we get that crossover, like what we see right here, confirmed with our next predictive indicator, that's the neural index, this red and green banner down at the bottom. That's going to give us a bullish expectation. And then our strength indicators down here, these predictive differences, these are going to tell you the strength of the current trend or the strength of the expected and upcoming trend. So do we expect to see continued strength, or do we start to see some potential weakness? All right. Now, here's an area of strength. Let's talk about that area of weakness that we saw back here. Have you ever wanted to better anticipate when there might be volatility going against your positions? Yeah, I probably thought so. So if you want to better assess and be prepared for those shifts in the market and keep your emotions at bay, right? That's the key when it comes to powerful, confident trading, is keeping your emotions in check, right? And the best way to do that is with data, is with facts, is with logic. And so when we see the artificial intelligence already telling us that we are seeing some weakness here, guess what? We can anticipate some potential weakness in the market, better plan, better prepare, and better strategize around this so you can either protect profits or potentially even enter into a different type of position to take advantage of the movements in the market. Because there is no such thing as a bad market, right? That's just an up market, a down market. And as long as you know what type of market you're in, you can make money in both. And that's the key, is understanding what type of market condition you're in. That's why we're looking at the SPY, the Qs, the diamonds here. And there are several other areas of the market that we could also take a look at to get a better assessment and overall big picture look at the current market conditions. We can do that if we have time, but let's focus here on current day. So let's assess from a VantagePoint standpoint last night, coming into today's trade day, what would you expect in the market? And we can see that we do have that bullish trend. Now everybody come down and take a look at that neural index. We see bullishness here. And then come down and take a look at your strength indicators, and we actually see these trending up as well, or maintaining their current bullish strength. So this helps your overall confidence, knowing that the general markets still have bullish strength. Now, with major announcements like CPI that came out, still just coming on the tail end of earnings, and so many other things that are happening in the markets right now from a fundamental standpoint, being able to navigate through those scenarios is vital and just absolutely imperative to keeping those emotions at bay. So this allows you to just trade based on what you see rather than what you feel, and really trade based on the artificial intelligence and the data and be prepared. So you can take that proactive approach. So as we see here, we have our major markets that we're assessing. So again, this is step one. Now, you can see we did the SPY very quickly. We could do this same type of analysis on the Qs. All right. Now we could go deeper into analysis and look at things like momentum and market sentiment as well. But let's just keep it simple and let's go ahead. I'm just gonna save this chart as our default. Sorry guys, little quick shortcut here for you, just so everybody can see how easy this is. I'll just load this chart from the previous default. And Gail, yes, it can absolutely help you with exit timing as well, right? And that's why when you start to see that blue line crossing below, that could be a signal that you may want to think about risk assessment, right? Put some protections in place, or maybe even prior to, you're already preparing for that shift because we have that shift in sentiment on the neural index and the predictive differences, and that blue line is coming down as well. Perfect. All right, just trying to keep an eye on the chat as we go through. So appreciate your guys' questions. And as we come through, now we're looking at the cues. So let's take a look at the cues and see what the market sentiment was expected to be for today. But my question is, would this have given you more confidence in the direction of, or the expected direction in the markets today? Fundamentals aside, right? Because we can use the technical analysis to help guide you through those fundamentals. Use the predictive technical analysis to give you confidence. So here we have that bullish trend here with the blue line over the black line. Come down, check your neural index, and we see that price action on this neural index. That's what this neural index tells us, is what is price expected to do over the next 2 days? Do we expect it to go up or do we expect it to go down? And understanding what price is expected to do over the next 2 days, well, sign me up. I want to see 2 days in the future, right? Especially for price. That can give you a whole lot of confidence, and then take into account your predictive differences. You've still got primarily bullish strength coming from your predictive differences, or again, those strength indicators down at the bottom. So our 3 points of confirmation thus far that we've looked at tells us that we are still in a currently bullish trend, and we can have confidence going into the markets the next day. Gail, I guess the question would be, what would the software say tonight after today's activity, right? So after today's activity, the software is going to update, and that's a great question, so thank you. After the software updates tonight at 6:30, you would see the expected sentiment for tomorrow's market using this assessment that we're doing right now. So we can, of course, take a look at the diamonds here, and we'll just load that from our default. Again, just keeping that simple here for us, and we can get into some further analysis a little later. But we'll take a look here at the diamonds. So if we look at the diamonds, we can see that we do have a little bit of weakness here on the diamonds, right? Now, here's where we also have to take into account some additional information, right? And that's going to be those strength indicators. So we can see those coming up. We can also see who's familiar with support and resistance. I'm just curious before I move forward, because I want to know if I need to go back and touch on that here very quickly. Okay, let's take a little deeper dive into support and resistance. So as you can see, these arrows, these are additional indicators that you can choose to add to your software here, but these arrows provide verified levels of support and resistance. Now, I don't know about anyone else, I don't look at a chart without support and resistance because it's that critical. These are critical pivot points for price within a trend. And so if you know that there could be a critical pivot point or a barrier for price, you may want to know exactly where that lies so you don't trip over it, right? You can either, jump over it or build a bridge over it, or maybe you just decide to take a different path, right? So when it comes to support and resistance, these can show you where those potential barriers for price are. So here's resistance in red. It's probably the easiest way to remember it. Or just look at the arrows that will tell you the direction of impact. So here is your support level in green. So these shaded areas are going to be levels of support and levels of resistance. So look at what happens with price. Price just ping pongs back and forth right off of these support and resistance levels, right? So what are we at right now? We are at a critical support level, right? So when you're at a critical support level, we need to see, do we have enough strength to continue pushing down, or are we likely to potentially bounce off of that support level? And there's a high likelihood that you could bounce off of that support level, especially since we've done that before. If you notice here, that support level right here, this is a bounce. Did anyone notice that that previous support level falls right in line with the current support that we're at? So that would tell you that we're probably at a very strong support level and we should be a little more cautious. We may not be able to break down below that support level. So knowing where those barriers are can help you anticipate what the potential movement could be as well. All right. So not only that, but again, we do have some potential strength coming into the indicators, our strength indicators also. So overall assessment on our three major indices. And again, I'm just covering the majors right now with the SPY, the Qs, and the diamonds, remembering that we're starting at the top and working our way down. And so this overall market assessment gives us some bullish confidence, sort of cautiously optimistic sentiment of the overall markets. So that way you as a trader can go in with a lot more confidence knowing what's going on rather than just kind of waiting for news to break, right? Because at that point, it's already too late. You're reactive. The emotions have already gotten you. You're biting your nails, sitting there waiting. Oh gosh, what should I do for today? Well, rather than wait, be proactive, use the predictive indicators, and have a solid plan for the next trade day, right? So market sentiment is huge because here we have our sentiment, right, of the markets. And I'll just pull this up again, because now we know that there's bullish sentiment. So this is where I say this kind of provides a path for you to go down. This is step number one. Step number two is going to be those sectors. So now that we know that the markets are primarily bullish, right, and have a bullish sentiment, I think we can all agree on that. Would anybody disagree on that bullish market sentiment that we just went through for today's expectation? Let me know. But now that we understand that there is bullish sentiment in the overall markets, we can move down to step number two and say, okay, well, where is all this money flowing in from? What sectors, what areas of the market are in fact really driving this bullish movement? Where should you focus your efforts and energy on, right? So that's where even like our IntelliScan can really help you. So for those of you VantagePoint users who have already been using the software, how many of you are familiar with a sector scan? Let me ask that, because we do have a tool here in VantagePoint called IntelliScan. So I'm just going to create a brand new IntelliScan. So you can see this is pretty much so just a blank filtering system right now, right? But we're actually going to add in markets or sectors into this scan so we can see the general direction of those sectors and the strength and weakness. Now, for those of you who don't know what a sector scan is or are not familiar with it, let me ask you this. Are you familiar with sector rotation? That flow, that ebb and flow of money movement from one sector to the other throughout the course of the year. Because there is, right? There is that movement of money throughout the course of the year. So we can actually use the spider breakdown. So we'll just add that category right on into our IntelliScan. It's really that simple. We'll just pull it from our market panel, add that spider sector, and drop it right into the IntelliScan with one click. So what this is going to tell you, and I'm gonna just pin this to our homepage so you guys can see the full sector scan. All right. And what this is telling you is exactly where those predictive indicators are positioned at this time. So it's telling you that in the consumer discretionary sector, that XLY, keep in mind, these are ETFs, so also tradable, but also useful in providing additional information where there's strength in the markets. All right. So consumer discretionary, we can see that our crossovers, our predictive timing indicators are all up, but there's a little bit of weakness on the neural index in that short-term difference or the strength indicator. All right. So with a little bit of red, basically, we would want to be a little bit more cautious, because what is our market sentiment currently? It's bullish, right? So we would be looking for markets that are typically have bullish strength, right? So we want to look for more green than red kind of coming across the board. So we have communication sector. That's actually green all the way across. So we're just looking horizontally across this line to see, okay, well, what's moving and what's not? What areas of the market maybe should we avoid, right? So coming on down, we can see where there's more strength in the market than weakness, right? And you're just coming down. You could even use your arrows to come down and just take a look at each sector, or you could even pull some of those up, right? So metals and mining, right? Looking pretty strong. We know the SPY is pretty strong, right? We looked at that all together, right? We know that technology, if we come on up here, we can look at things like technology. You could also look at value. Here's your semiconductors, right? So we had strength within the semiconductors. Now you could open up that chart directly from the scan, so we could do that as well. So let's just look at semiconductors, right? And we can see that we do have some strength coming from our semiconductors as well. So we have a green crossover, so bullish crossover, right? Indication of up. Neural index is bullish, and your predictive differences or the strength indicators are also bullish as well. A little bit of resistance right up here. So should you be a little bit more cautious? Sure. But using those predictive indicators, you can also better anticipate those market movements as well. So come in here, identify the different sectors that are actually moving with the markets, right? Again, that top-down approach, starting with the market assessment, moving on down to the sectors, finding those sectors that are moving with the market. So we're not trying to go against the market. We're following the money, right? That's the key piece here. It's so much easier to find trades that are actually moving with the markets than it is to try to counter trend trade against it. And sometimes there are some good counter trend trades. I'm not knocking that, but it's certainly a lot less bang, for a lot less buck, right? Or a lot more bang for a lot less buck, I should say, right? Or definitely more work, right? With additional risk. So here's your sector scan. Very quick, very simple, very easy to identify that market sentiment and then come in and identify those sectors. Now then we could even take it to another level, right? And actually add in stocks to our IntelliScan, right? So let's take out our ETF sectors here. I'm just going to delete those markets right out of the scan. And you could save individual scans as well, guys, but just for our session today, we'll just create a brand new scan here. I do have many scans saved for specific strategy setups, so that's a really, really cool feature within the software, is that IntelliScan that can find those custom setups depending upon what you're looking for. But we can actually take our markets, and I'll just drag and drop all of our stocks in here. You guys can see we will scan through these stocks together. Just going to drop all of those in the IntelliScan. Now there's quite a few, so it'll take a second to load here. All right, so then depending upon the types of opportunities you're looking for, we could search for opportunities that are moving in a particular direction. So are there any types of trends that you guys typically like to look for when it comes to your trading? Tell me a little bit about your trade style, and maybe we can set up a scan for that. So we'll set these all to the direction of up, because what was our market sentiment? Bullish, right? So with that bullish sentiment, we can also then add in our category, and I'm just going to type in our indicator panel right over to the side. So we have access to all of our indicators over here and all of our markets over on the left. All right. So now that we see we have category added to our IntelliScan, I'll just open that up. And here we see the breakdown of where these assets reside. What sector do these markets come from? So now you can focus on those areas that are really starting to trend or have good money movement from that sector assessment. right? So again, that top-down approach, looking from our bullish market sentiment down here from our major markets on down into our sector scan or our sector assessment for what markets are moving with, or what areas of the market are moving with the major indices, and then on down into our individual opportunities that are also moving bullish within the sectors. So step 1, 2, 3, right? Market assessment, sector assessment, evaluate your opportunities. Now you know where to start, right? And what's going to guide you is kind of the most probable areas of the market for success. Because what you're essentially doing here is market confirmation. You know, we talk a lot about layered confirmation here at VantagePoint, and that's because you really do want to, you know, have indicators that are going to give you the most amount of confidence, and these predictive indicators can certainly do that for you. But it's not just one indicator. It's multiple predictive indicators that are giving you the confirmation and the confidence to make a trade decision rather than hemming and hawing and waiting and guessing, right? So you can start to make strategic decisions proactively and have that trade plan, so you can not only enter at better timing, but also better manage your positions and perfect that exit timing as well. So as we can see, we can take a look at some of these markets here. Now, we may be seeing, you know, several markets that, you know, there's 65. That's still a lot of opportunities here. Now we're filtering through like 1,747 assets here, right? So plenty of opportunity that VantagePoint forecasts for, and these are just the individual stocks. You could also add in the opportunities as well, right? Now you could then see that we filtered out 1,682 with 65 meeting that setup requirement that we set forth in the scan here, just looking for all signs going up, right? We want full confirmation across the board. And so, you know, from this standpoint, we can see markets that are in fact shifting, right, to a bullish sentiment. And we can see quite a few in here. We could look at Costco. And so we can see that market that was coming down, and now we have a nice shift to the upside. So this is still coming in our scan, but we could look for opportunities where we have this fresh reversal moving with that market sentiment, right? Because at this time, the markets were starting to shift back bullishly. And so on 8-1, coming into 8-4, we already started to see that shift in sentiment happening, right? And so this opportunity would have identified right here on 8-1 with our full confirmation. Remember those points of confirmation we talked about? Here's your blue line crossing over the black line going up. That trend is green. Here is your support level, right? We see that coming up, but here's your neural index, bullish. Here's your predictive differences or strength indicators, bullish as well. And then you could also even identify that predictive trade candle, which is also bullish as well. Now, notice Costco right at resistance, right? So we know that that's a little riskier. Well, remember, we see support and resistance on the chart. We could also even, maybe you're a trader who doesn't like to trade up against resistance. So we could actually look at that verified resistance zone and plug that right into our IntelliScan. So we can add that to IntelliScan. So we can see how far away is current price from that resistance level. So if you want to talk about a powerful way to find opportunities that meet your trade setup, this is a great way to do that. But not only are you looking for that trade setup, you're using predictive data to do that. So if you need more information about VantagePoint while this loads, just go to that VantagePointForecast.com. I think we've put it in the chat quite a few times for everyone who needs more information. But VantagePointForecast.com has a lot more information on VantagePoint and just, the decades that we've been helping traders and just empowering them to make more confident, more informed trade decisions using not only the predictive analysis, but also the education and this process, this top-down approach. And so now we've added also close price. I referenced close price being right up against that resistance level. So this is a very strategic way to start looking for different types of opportunities. So if you wanted to look for a close price that was maybe below that resistance level, right? So now you've got 24 opportunities that you could look at that are identifying as fresh opportunities, new opportunities that are not yet right up against your resistance level, right? So for example, let's take T-Mobile. And here we can see we do have room to run before we hit that resistance level. So not only are we following the market sentiment, keep in mind this whole time you're looking at these markets through a different lens because you've already looked at the overall market sentiment, and we know that things are still looking bullish, right? We're again optimistic or cautiously optimistic about the market sentiment. So we have a bullish expectation on the markets. We're identifying areas of the market such as technology, utilities, semiconductors that are still moving from our sector assessment. And now this has led us to better potential opportunities that is also following that money. This is the way that you follow the money in the markets. It's not listening to what's already been moving or what has already moved. It's anticipating these moves ahead of time by looking at the data. Well, you don't have to do that on your own. VantagePoint does that for you. Because not only, we're not just looking at T-Mobile, and I'll just kind of open up the details here for everyone to see, but what goes into the artificial intelligence is incredibly powerful. You're actually looking at 31 different markets that are impacting T-Mobile, and that's this kind of web of markets that's surrounding T-Mobile to either push or pull or drive it, bolster the price action or pull it down. And so assessing these really impactful markets, we call them intermarkets, right? Because these are the markets that are driving T-Mobile. The intermarket analysis is in fact what's patented through our patented process and our artificial intelligence and predictive indicators. But this data is evaluating these 31 markets and the 31 markets that are impacting that market and the 31 markets that are impacting those markets. And so this type of analysis is just not humanly possible. It's just incredibly powerful to see the forecast day in and day out and just how accurate they are with up to 87.4% accuracy. You think that can give you an edge? For sure, right? And then couple in the power of being able to strategically make those trade decisions based on that top-down approach. Well, now you know where to start, and you have a guide to get you there, right? So again, T-Mobile here, let's just go ahead and double check coming from our IntelliScan because you do want to evaluate, right? You do want to look at the chart as well. Do we have a bullish crossover? We certainly do. Do we have a bullish neural index? We certainly do. Do we have a bullish neural index here? Predictive differences or strength? We do, right? And then of course, we're not yet up against resistance. So we know we're not running smack dab into a barrier. We have a little bit of room to generate some momentum before we have to worry or contend with any sort of resistance, right? And I do believe, this came up in the scan, but I believe T-Mobile was up today, right? Right around 252, right? So let's take a look at the next predictive indicator here, which is going to be your predictive trade candle. All right. So here's your predictive high, your predictive mid, and your predictive low point expected for today. All right. Notice this date is 8/12. All right, so we had this information last night, but take a look at how powerful this is too, right? Our range for today was 248.30 with the high at 252.59, right? So just a couple of dollars off. Our range was 250.66. So less than $2 off for a $250 stock. I mean, that's pretty darn close when it comes to the expected range. So you can use this predictive range for strategic entry points as well, right? If you are a bullish trader and you're expecting for this to go long or enter into kind of that buy low, sell high mentality, you may want to look at entering in somewhere towards the bottom range of that predictive trade candle, anywhere between the midpoint or the low, right? Because then you have a lot more room to run. Again, that old adage, buy low, sell high, right? So wouldn't you want to get in at the lower point versus buying in at the top and watching it fall? So if the market opens somewhere down towards the lower range of that candle, you can strategically place your entry point, whether you're, placing an order ahead of time or waiting for that price to drop. That's up to you. But this takes the guesswork out of it. Right? Having that predictive range and just with its incredible accuracy coupled with the other predictive indicators gives you so much power in that position. If you chose to take something, again, not saying T-Mobile, I'm just talking about any position in general, right? As an example, though, if you were to take a position knowing that it's expected to go up from that predictive analysis, you have so much more confidence there. All right. So let's take a look at some ticker symbols. So do me a huge favor and type in some ticker symbols for me. Let's get into some live analysis. I was hoping to leave about the last 20 minutes. So I'm over about 3 minutes, but 4 now, but I think we still have plenty of time. So I saw some in here earlier. So let's take a look. There were some that were requested, so thank you for those. But yeah, you can identify swing positions. You can identify shorter term positions as well, whether or not you're a swing trader, a very short term swing trader, maybe 1 to 3 days, whether you like to hold a couple of weeks, even day trades as well. Looking for shorter term indications. So just to answer some of those questions that came in through the chat earlier, VantagePoint is very customizable. So that way you can, in fact, customize your software based on your trade strategies as well. Google, someone asked about Tesla. I should have known. I usually have Tesla just pulled up anyways, but certainly let's take a look. Here's Uber. Thank you, Mo. We'll look at Uber, Joanne, Adobe, right? I appreciate the ticker symbols. Trust me, I know how to spell ticker symbols better than I do company names at this point. Anybody else feel that way? All right, let's dive into some analysis here. So I'm going to start with Google here. All right, so again, approaching this lens from what sentiment? We're bullish on the market sentiment as well. So we are already coming in with an advantage of knowing what the overall markets are expected to do, right? Now that everybody knows that you can get a predictive sentiment check using those major indices, the SPY, the Qs, the diamonds, and identifying different areas of the market that are moving. So we know Google, right? And so we can see that Google here is in fact bullish on our medium term crossover, right? So with Google, we can see that not only do we have a bullish crossover here, but we also have a bullish neural index. And then our predictive differences are also trending up and staying pretty strong as well, right? So with that, we also factor in our predictive trading candle. So that's 4 points of confirmation right there that we already have as a potential bullish sentiment from this individual asset, right? So the next piece is going to be support and resistance. Now, here's here's what you have to understand about support and resistance. And I know a lot of you are familiar with it from your chat earlier. But for those of you who are not familiar with support or resistance, there's a couple of rules around support and resistance. All right. And this is why we do these sessions, because I want to make sure that everybody has the knowledge they need to make an informed decision. All right. Just because you're up against resistance does not mean that you need to be fearful or scared. Is there a little bit more risk there? Absolutely. All right. And really, trading is just about assessing risk versus reward. All right. So it doesn't have to be super complicated. In fact, you do want to keep it simple. And that's why we have that top-down approach, that sort of layered confirmation. So that way, when you get to the end of that assessment, you can make a confident trade decision. So part of that assessment here on our current chart is going to be resistance. And so when it comes to resistance, we said that resistance pushes down on price, right? Everybody remember me saying that? Resistance pushes down on price. And boy, Google's had a tough time breaking through that resistance here, right? At this point, it probably has a headache. It's like it's just been banging its head on resistance here, trying to break out. And here's the key to understanding support and resistance. Once we break through two closes above, so when we have two consecutive closes above a resistance level, now keep in mind, here's our resistance level, right? Right here, denoted by the arrow and the bottom of that box. So you can think of the bottom of that box like that brick wall. But with enough force, enough momentum, we could potentially push through anything, right? So resistance at this point, we are seeing we've already actually broken through this resistance. We've gone higher than we have the last 3 times we've tried to break that resistance. And so with two consecutive closes, now 2 consecutive closes, that just means 2 days in a row, right? 2 days in a row, we've been able to close above this resistance level. And you can see that here where we closed above here and we closed above here. So this is count of 1, 2. This verifies our potential breakout trend, right? So when we see a break of resistance, that can identify a breakout trend. All right. Similar to, this works to the downside too, guys. When we have a break of support, 2 closes below for 2 days in a row, that could signal a break or a breakout trend to the downside. But in this case, we're looking to the upside. Again, market sentiment is bullish. We're looking for bullish opportunities here for our examples. And so here we can see that breakout with that close above resistance. So giving you nice confidence that you could have a potential nice move on Google. Again, last night, being able to prepare for the trade day to come. So whether you're looking at this as a potential opportunity, or maybe you entered back here when VantagePoint first identified this trend, right back here with that bullish confirmation of the crossover, bullish neural index, bullish predictive differences, check them 1, 2, 3, and then we probably had a predictive trade candle at that point up. There are ways to go back and look, but just for simplicity, we're going to, and just so we can get to other charts, we can see that we did have confirmation here at that point. From there to current day, and I know we're up definitely more than that because we had a breakout at up to 204. So you've got about a 16% move in just a little over a month. Of course, you could do a profit calc just depending upon, let's just say, 1 options contract or 100 shares. So you've got a profit, of course, less premium of about 2,800, and that is just in about 30 days. Now, confidence to stay in as well, unless you want to take those shorter term moves and get in and out, taking those profits at those key pivot levels. Again, customizable, so you can certainly set your parameters and your trade strategies according to your trade protocols. All right, let's move on to Tesla. Unless there's more questions on Google, but I don't think so. I think we covered everything there. So again, crossovers, we're just looking for agreement. That's the beautiful thing about this, is we're just looking for all things to come into alignment. When we have agreement, things typically tend to go a lot smoother, right? When there's conflict or contradiction, then things get a little fuzzy, right? So have confidence in your trades. If your indicators aren't giving you confirmation, then maybe don't force something that's not likely to work out, right? That's just life. But as we see here on Tesla, right? Where do we see our crossover on Tesla? Tesla currently on a bullish crossover. And in fact, we saw that back here on 8.7. Now, if you're a shorter term swing trader and you wanted to switch over to like a shorter term crossover, all right, and this is going to help you see these trends just a little earlier, because our short term crossover, again, still utilizing that same predictive analysis, but a slightly different formula that's going to be a little bit more sensitive. The short term is just looking 1 day ahead. The medium term crossover or medium term predictive moving average looks out 2 days at the trend, whether it's expected to be bullish or bearish. The long term, more conservative, looking out 3 days. And then with our most conservative, the triple cross being that area of integrity of the trend. Okay. Also key levels here within the triple cross. So we can take a look at that in a moment. But using the shorter term indication, you can see we in fact see that crossover happened on 8.6 with that bullish neural index and bullish predictive differences. So you guys tell me, on this day, did we have bullish confirmation? And were we at resistance? No, we had plenty of room to move, right? Enough room to potentially generate some momentum to push through our resistance level, right? So at this point, you may also take a look at some momentum indicators to assess from a momentum standpoint on whether or not we had enough strength to really bust through that brick wall. And I think we would see that occurred. And then you can also see that we did have one close above that resistance level. And then today would have potentially been our second close above the resistance level. So we're at 34.84 on Tesla. Somebody correct me if I'm wrong there. I think we ended right around 340. 340.62, right around there. 340.84. Sorry. Got a little tongue tied there for a second, but want to make sure I give you guys the right values here. So 340.84 is where we closed today. So is that above the resistance? And in fact, yes, it is. We've broken through those two resistance. So now our next level to contend with would be that 357.76. So we can kind of assess from that standpoint. If we still maintain bullish strength when the software updates tonight, then you would have good confidence of that potential continuation up to possibly the next profit target or key level, which would be right around 357.76. So bullish anticipation on Tesla today. I think we called that one right. I'm not surprised anymore when VantagePoint tells the markets exactly what they should be doing for the next day, right? So I'm just kidding. Markets are going to do what they're going to do, right? There's always risk, but have a guide, right? Don't trade blindly. Use the predictive data to give yourself an advantage, right? Use the power of technical analysis, even if you're not using VantagePoint. So even if you're not a VantagePoint family member yet, make sure that when you are assessing the market, you're taking that top-down approach. You're giving yourself the most confidence in that position and also allowing for protection as well. So let's take a look at Uber here. So on Uber, we can see we do have a predictive crossover. All right. A little bit more concern on Uber because we do see this neural index is bearish as well. Now, we also see that we have our predictive differences, which are honestly a bit sideways, if for lack of better terms, right? They are kind of a mixed signals, one going up, one going down, one going sideways. And so we do want to exercise possibly a little bit more caution here. We're just coming off of earnings that happened on 8/6. So you can see we do have that earnings a flag right there as well. So coming off of earnings, we would expect to see a little bit more chaos until that earnings sort of chaos dies down, right? That volatility from earnings settles and the trend finds its way again. So we'd be a little bit more cautious there just because of the uncertainty here with the indicators giving you mixed signals. And that doesn't mean that the software is not doing what it should do. The software is telling you where the odds are stacked in your favor. All right. Things can still go up, things can still go down, but give yourself the best advantage possible. And I think Uber did end right around 91.73 today. Guys, check your predictive high, predicted low values for today. And you can even turn on kind of those pop-up windows as well. So if I hover over here, you can see the predictive high was 91.96 with a low at 89.25. And so our range for today was slightly higher at 91.14 to 92.56. So we did break the high, but we were expecting a higher high and a higher low because this predictive trade candle is both bullish for the high and bullish for the low. So we were expecting bullish potential price movement today. And again, we ended right at 91.73 with that predicted high at 91.96. That's pretty darn close if you ask me. And again, bullish sentiment. So we were still expecting that bullish move, just a little bit more uncertainty because of the neural index and predictive differences down there at the bottom. So let's take a look at the next one. Somebody asked about Adobe. So with Adobe, right, we can see that we are currently in a bearish trend. All right. So as you can see, we have a neural index that's also bearish, right? And the predictive differences that are bearish as well. Now, I will also point out, and you guys asked for this analysis, right? So, I mean, I can't put this support level here. This support level is key because we already see that there's a little bit more risk here of bouncing off of this support. Remember, what did we say? Support has upward pressure on price. It can push things up. Just like resistance acts as a ceiling, all right? Support acts like a trampoline, all right? And sometimes it can just boom, it can bounce right off of that support level. And if you notice this support level, right? And that's why this previous support level is so important to see here, because we've already tried to break that support level once and twice and failed both times, right? So now we're seeing that potential bounce off of the support level. So we would already know that we are sitting at a fairly strong support level. This might not go any lower, or we have the potential for a bounce. So if you're in a short position here, you might be thinking kind of, management, exit possible strategy. Or if you are looking for a bullish trend, this would be, maybe a little premature here, but we could also, that's why watch lists exist as well. But better than that, just wait till it comes up in an IntelliScan, right? Then you have full confidence in the predictive indicators as well. All right, so going to go ahead and take a look at, I think this is our last one. Wow, we had time to get through them all. And I am just going to go a few minutes over. If you can stay with me, hang tight, because here we come. Sound hound. We had earnings, right? So this is going to be a pretty quick analysis. We can see that our earnings assessment was Thursday, August 7th, and that was an aftermarket close assessment. So day of impact would have been 8.8. We can see that big gap up from earnings, just kind of propelling us into that resistance level that we can see down here at 1138, and then jumping us all the way back up, even to break possibly this next resistance level. So with a gap up like that against resistance, we'd be very, very cautious to see that potentially hold strong. All right. And we did, in fact, come back down and fall below that resistance level today. I think we ended at 1598. So looking at that, we can see we did have some possible strength, but again, looking at that resistance, guys, and earnings, we're still in the midst of this earnings chaos. So we're just allowing a little bit of a grace period for earnings to sort of settle. All right. Anytime you see earnings like that, it's going to be a little bit more risky on the trade because you have earnings. There's a level of fundamentals that's going to cause an asset to potentially swing very rapidly, very quickly, and you just need to be more cautious over earnings. I'm sure everybody in this room knows that. If you didn't, now you do. But you do want to be cautious. But even after earnings, you can see those technical indicators, especially like resistance, would have definitely helped you to see that you are at a ceiling at that point, and there is a possibility of reverting back down. So now, will we break that resistance? Your predictive forecast can certainly help you navigate through that moving forward after that earnings grace period. So I certainly hope today's session was helpful to give you guys kind of a new outlook on assessing the markets and following that money movement. We were able to identify some great potential opportunities by just looking at the market sentiment, then moving down to the individual sector, and then eventually finding those individual opportunities that were moving in that sector as well. So stacking that confirmation, stacking your own confidence, whether you're using VantagePoint or a different platform, please make sure that you are just trading with informed confidence, making the best decision for yourself. And I hope everybody has a great rest of your day, and we'll see you guys on the next live session.